Hello business owners and investors. My name is Jason Norp with KWB Commercial. Here we talk about all things related to commercial real estate. Today I want to talk about planning for a shift in the market. We've all experienced or we know that our economy is constantly changing. Today we find ourselves in the middle of the COVID-19 pandemic, and that's shifting our marketplace. I want to talk a little bit about things to plan for so that you're prepared for a shift in the market. These may be things that you can apply to what you have going on in your investment properties today or in your business today. They may be things to plan on as you purchase new properties and as you make other investments. One thing I want you to think about is keeping fixed expenses in your investment property low. And yeah, you may say that seems obvious, and it is. But often we let costs creep up on us. One specific one is when we make that initial investment is the loan value or what our loan payment is. If we've leveraged ourselves on a particular property and we've bought this property maybe only 20 or 25% down and our income level is maybe lower on this property, so we're pretty close to a break even on it, that makes a difficult situation to be able to adjust in a shifting marketplace. So as you plan on how much equity or how big your loan is going to be on a property, what your payment's going to be, and compare that to your cash flows, make sure you're thinking through how can I pay that loan down either sooner, or how can I put more money down so that loan payment's down lower so that when you need to make a shift in what you're taking in rent-wise, you can adjust. So let's talk about that. In a shifting economy, tenants often come to the landlord and say, hey, I need some abated rent, or I need some reduced rent. I need some free rent for a period. You as a landlord don't want your space to become vacant during a time like this. I've got landlords right now that we have spaces that went vacant right before the COVID-19 pandemic hit. And we've seen a drastic reduction in the number of tenants or buyers looking for property. You don't want to find yourself in that position if possible. So how do you do that? If you can lower your rents down and still be covering your expenses, you're in a much better position than a landlord that can't do that. Another thing I want you to think about is reviewing your lease. Specifically this section that talks about defaults. Defaults by your tenants. If you have a tenant that is not paying rent, what are your options to evict that tenant out of the space and then at least be able to start working on putting a new tenant in there? If your lease doesn't have good terminology there and isn't in a place that allows you to make those adjustments as you need to look at either adjusting leases that are out there with addendums or making sure your next leases that you do, they have that covered well. You should also last be thinking about what do I have in reserves. And again, I think we hear this over and over again. Make sure we have a savings, make sure we have a reserve. Do that for your commercial property. Either do that across your portfolio or think about individual properties and what you need to be covering reserve-wise. Whether you're covering a loan payment, whether you're potentially covering expenses, unexpected expenses, especially during a downturn in the economy, if we're prepared for that. Those reserves will go a long ways to make sure that you can keep your tenants in your space and that you can keep ownership of your building. Again, my name is Jason Norp with KWB Commercial. If you're in the Boise market, feel free to look me up. Thanks.